Hey everybody, welcome back to the channel. Hope you guys have been doing well. In today's video, I'm going to cover a little bit of macro. I'll go over some TA. I'll let you guys know where I think the market's headed. And lastly, I'll cover a DeFi project that I think you guys should keep an eye on. And currently, I'm in the process of forming an alpha group. I basically want to create a collective that has a common goal of digging deep into projects and finding gems that could do potentially well next cycle. A large part of the reason why I did pretty well this last cycle, minus the hack, was the fact that I was actually researching during the bear market, and I was largely doing this independently, but this time around, I want to do this with as many people as I can. Now, I'm already part of a bunch of different private groups. I also have a pretty decent network that I've established, but I noticed the last cycle, I was able to pick up a lot of quality people from within my Discord. So if you're like me and you're super hungry to just kill it next cycle, then I strongly recommend that you check out my Discord channel by clicking the link in the description below and then get involved in the conversation. Now with the intro out of the way, let's go ahead and dive into this video. All right, let's get things started. So in the first segment of this video, we're going to be talking about the following topics. I like to use G&K as confluence when I'm trying to figure out which way the market's headed. And the lines that you're looking at here, both the blue and the white, I drew in these lines a couple months back. Now, I wasn't 100% convinced that these zones would be respected, but they definitely were. This blue line here acted like previous support, and when we started consolidating here, I had a feeling the market was going to go risk on. You couple that with the fact that despite bad news, the market continued to rally. That gave me more conviction that we were definitely going to have a sizable move up. Now, I expected some of this to last into September. I figured, 2 weeks before the FOMC CPI ETH merged, that's when we would see this collapse. But the move that we had up went up so much, so fast, that I think there's a chance that this may be the local top. Now, you couple that with the fact that the VIX is also approaching a key zone of support. If we see this consolidate here, instead of continuing to decline down further, that could be another indication of a local top forming. And on top of that, look at the yields. Since the rally, the yields have been going up. Look at this, since August, the yields have been going up. This is the 10-year also going up, the 30-year also going up. And so again, we're getting a decent amount of confluence for a local top forming. Now, the other indicator that I follow is the Fed net liquidity indicator. If you guys are interested in adding this indicator, make sure you guys check out my previous video. I linked it in the description. Now, if you look at the net Fed liquidity, the correlation between the amount of liquidity poured in and how much the stock market has gone up, the correlation is almost 1. In fact, I think if you go back to 2008, the correlation is 0.92. So in other words, every $1 that the Fed adds to the economy, 92 cents of that goes into the stock market. And if you look at the recent price action, the market basically topped when net Fed liquidity peaked, and we bounce every time we see an acute rise or a transient rise in liquidity. And the thing is, as the liquidity is drained from the market, we're going to continue to see bounces like this, because there's still a decent amount of cash left out there. There's a lot of people that took profits up here that don't mind deploying some of their funds down here because they perceive it as a significant discount. And so when you have an environment where the liquidity is thin, it's relatively easy to get these types of big moves up. So as long as the macro remains roughly the same and the Fed continues to remove liquidity from the market, I think we're occasionally going to see moves like this as people pile into the move. But once it gets exhausted, in my opinion, there's a high probability that we continue our descent down. Now, when it comes to liquidity, the fact that they're shrinking their balance sheet isn't going to make things better. The Fed in May said that it's going to soon start shrinking its massive near 9 trillion bond portfolio. They further stated that starting June 1st, they'll let 47.5 billion worth of assets roll off their books, more formally known as balance sheet. Then that number will increase to 95 billion by September. Now, relative to the size of the market and their bond portfolio, these numbers seem small, but I'm a little bit worried that the market isn't going to be able to absorb all of this QT at one time. Because in history, we've never done something like this where we've increased rates at a historic pace, and on top of that, also shrunk the balance sheet. I mean, Yellen, who basically had Powell's position during Trump's first 2 years, she tried to shrink the balance sheets, and the markets didn't like it. And now you have Powell, who's about to do it at an accelerated rate in addition to raising the rates. Now, this might seem out of place because I tend to focus on the US market, but just give me a few minutes. I'll explain why what's happening in China could adversely impact US equities. Now, unlike our central bank, the Chinese are engaging in QE, but the big problem that they have now is that there's this big real estate crisis that's unfolding. Just to give you guys some context, Chinese household wealth, about 70% of it is stored in property, and it accounts for 25% of the Chinese economy. And in China, home buyers pay for properties up front, and these pre-sale funds are used as basically interest-free loans for property developers. They use this to rapidly develop and expand construction projects. But the problem is the central bank noticed that the housing market was getting a little frothy, and they tried to rein in these developers and their ability to borrow money very easily. When that happened, cash flow became constrained. It led to stalled building projects, half-finished houses, which means that many of the homes that people bought and paid for in full were not actually being built. And this resulted into home buyers across the country refusing to pay their mortgage because of the stalled projects and unfinished homes. And the problem is that many banks perceive these loans to developers as being very safe, so they lent out money of depositors, and now depositors, because of this stall, aren't able to get their money out of the banks. Now, the reason why it's relevant to US equities and Bitcoin and crypto is that a lot of these companies overseas have exposure to US equities. And so to raise funds to cover the cost of a lot of these projects, there's a chance that some of these equities may get liquidated in the process. And on top of that, you have to take into account that the economies are a lot more interconnected these days. And so we have a lot of US companies that have clients overseas. I believe Apple gets 20% of its revenue from China. And so if there's a significant slowdown in China, it's going to hit the revenues of a lot of American companies. Now, moving along, another issue that should concern all of us is the fact that in the past, we've never had CPI come down meaningfully until the Federal Reserve interest rate has gone above it. And the problem today is that these rate hikes might look small relative to the hikes that we did back in the 70s, but we have a lot more debt these days. So even with a small increase in the rates, it could have a profound impact on the economy. I'm guessing that Fed is probably going to end up giving up on its 2% target because either the markets are going to collapse or something's going to break, and then they're just going to have to accept the new norm. Like, I wouldn't be surprised if 4 to 5% is the new norm. And in that setting, if we have a new revised target of 5%, that to me would be bullish for all risk on assets. If that happened, I'd probably allocate pretty heavily. All right, in terms of TA, we're going to keep it nice, short, and simple. Last night in my private channel, I messaged my group and said the charts look cooked. And right now, if you look at most of the charts out there, I think Aave is probably the cleanest. You can see that the trend looks like it's exhausted, whether that's Aave, FTT, Sol, Bitcoin, and even Ethereum, which basically demonstrated a lot of relative strength to Bitcoin. This looks okay. I don't think this looks too bad. But if you look at each individual chart, the rally looks like it's cooked. Now, the thing with crypto is it's likely to bottom first, but it's also likely to begin its descent down first as well. I like watching the following indicators, many of which I covered in the earlier segment, but I think these give you a pretty good approximation. I mean, I don't use them by themselves. I use them all together to add confluence. You can see that J and K looks like it hit resistance and it's probably topped out. You have VIX approaching a local bottom. You have the yields rising, DXY pumping because of the Fed's policies. They continue to tighten, so the demand for dollars continues to go up. And you can also think of this as people cashing out into dollars, because as people cash into dollars, obviously there's a finite amount of dollars out there. And so as you have more assets going or being sold into dollars, the relative strength of the dollar will go up, and that's reflected here on the DXY chart. And on top of this, remember I said September, they're going to increase QT. So we're going to have $90+ billion coming off the balance sheet. We have CPI that's going to come out. We have the ETH merge, which people are probably going to sell ahead of. And then we have the FOMC meeting. And that's why on my Twitter account, which I recommend that you guys give a follow, I said that this market rally probably has 1 to 2 weeks left. I expect a lot of people to de-risk heading into September. Now, if we've in fact bottomed, you're probably going to see something like this. You're going to see a lot of these alts and majors correct in a choppy pattern down. They're probably going to approach range lows, will consolidate, and perhaps enter accumulation. Now, if we break this previous low, the price could easily fall anywhere between 13 and 15,000. I think that would be no problem. But the area where you have a lot of interest, or maybe even some order blocks, are around here, between 10 and 14,000. Now, personally, I'm open to this being the bottom, but because of the macro, I think there's a higher likelihood for more downside. Unless we see major players come in and begin accumulating at the previous range lows. Otherwise, things probably get worse before they get better. I wouldn't be surprised if we went down here anywhere between 10 to 15K for the cycle bottom. And if that happens, you can expect most of these alts to go down another 50 to 70%. And so I'm being a little bit patient. I have been buying a little bit here and there, been buying a few GameFi tokens, because I think even at today's prices, the risk to reward for those tokens is very good. But the lion's share of my net worth is still in cash. All right, usually I'll cover a few different projects like an NFT, a DeFi project, or a GameFi project, but today we're just going to cover one, which is Kujira. Now, Kujira unfortunately suffered from the Terra collapse because originally they were building their project there. They were actually doing really well. They were getting a lot of usage, but after the collapse, you saw the price go down less than a penny. But since then, they've risen from the grave, and the token currently trades at $1.55. Now, the token isn't very accessible. It's not listed on any exchanges. And personally, I love finding tokens like this because typically how it works is that a token will come out. It'll be listed on a DEX. If there's enough interest and traction, people are purchasing this token. That'll motivate exchanges to add it because now they know that this token is in demand and there's going to be volume if they support it on their exchange. If there's enough volatility because of the demand, there's a lot of people buying and selling it, then you'll see perpetual products produced. And so that's typically the growth cycle of these tokens. And so right now we're in the very early stages where you have to jump through hoops to purchase the token. Also remember, the liquidity is relatively thin, so it's not like whales can come in and accumulate this thing. They're not going to be able to accumulate until it hits larger exchanges or it's available on OTC. And I think we're months, if not years, away from that. Now, with that being said, let me give you guys my bull case. After the Terra debacle, they were able to save 1/4 of their dev funds. And just weeks later, they spun up their own chain. To me, that says something about the team. And I believe this team is 16 members deep. And on Terra, they shipped really fast. I mean, this team is very active. They're on point. And I think having a strong team definitely increases the odds of the project being successful long term. In fact, it's probably one of the most important metrics when you're assessing a project. And they've already gotten to work and created a decentralized order book where you can trade Kuji, Juno, Osmo, Atom, Stars, Evmos, Secret, and later they're going to include margin trading, either through perps or some other product. And I think the most important product that they have is the decentralized liquidation dApp. It's built so the average normie like me and you can use it. Typically, whales will dominate this space by creating bots, but with this product, normies like me and you have a chance to make some decent profit. And on top of that, they're also coming out with the over-collateralized stablecoin. I think this could have some potential given the void that we have on IBC after the Terra collapse. And unlike UST, it's going to be over-collateralized. And they're going to use Atom first, and eventually they're going to use other assets to back up the stablecoin. And lastly, they have a staking dApp where you can stake your Kuji tokens, which by the way, aren't inflationary. And what they're going to do is they're going to take some of the real revenue that they generate, not just through emitting tokens. They're going to take real revenue and they're going to disperse some of that to stakers. And the staking rewards that you receive aren't just in Kuji, but all assets they generate revenue on. So that includes Secret, Atom, Stars. Now, if you're interested in purchasing this token, I'll include a link to this guide in the description below. I decided to go ahead and slowly dollar cost average into this. I think because of my general view of the market, there's potential for this thing to go down, but it's another one of those tokens that I think is well worth it based on the risk and reward. And you have to remember that coming this year and next year, we're going to see a lot of airdrops on Cosmos. So that's part of the reason I've also started dollar cost average into Atom. And my plan is to just stake these tokens and do my best to keep up to date with all the airdrops, because sometimes there is a finite amount of time in which you can claim the tokens. And I have a feeling that in the coming year or two, we're going to see many more projects start building their own chains, like DYDX did, like Kuji did, like Berachain is going to. And as these projects come into the eco, an easy way for them to go ahead and market themselves is by doing an airdrop. And remember, it's POS. So as you stake these tokens, you're going to be earning more and more of them. So you'll be able to compound your rewards. Now, with that being said, if you guys are hungry as I am and you want to join a community of like-minded individuals who are also looking to find quality opportunities early to pick up the next 100x, because in the last cycle, my community and I were able to identify numerous 10 to 100x opportunities. And the people that made the biggest gains were the ones that got in early. So if you're interested in joining a community like that, make sure you click the link in the description below and join my Discord channel. The public channels are a little bit more quiet because of the bear market, but the private channels, we're talking almost on a daily basis. In fact, in many cases, the alpha that I get from the other groups, my network that I've established, I'll publish it in real time in my private channels. And if you're interested in joining the private channels, it's super cheap. It's just $20 a month. Or you could reach out to me and I could set you up with the crypto payment. At a minimum, I would recommend joining the Discord and accessing the public channels. And if you're really into crypto and securing life-changing gains in the next cycle, then I would suggest upgrading by joining my Patreon, which you can access by clicking the link in the description below. With that being said, this is CryptoOneStop signing out. I'll talk to you folks next time. Bye.